And it's amazing how a lot of people still don't know that they can invest from their super.
Surely.
Because the whole point of buying investments is that the money should work for you.
When it comes to lending, right, SMSF lending is different to residential lending. If I ask you if you've got money, would you go buy shares or property?
Me today we have got somebody special with us, because when I've been telling him to come join on the lives again and again, but mate, he is busy. So let's welcome Mr. Shamir.
Hi, how are you?
How are you, Shamir?
I'm good, and yourself?
I am great, but for everybody who doesn't know, we do talk of multiple times during the day. So yeah,
Great.
like Shamir handles all Aram and Co's financials and investors, and getting them the best deals, the best structures, and all the bling bling, all the numbers. He does that for us. So Shamir, how is
Yes.
everything going?
Busy, it's getting there with the RBA's rate hold, which is good. Things have started picking up. Fixed rates are dropping, right? So it's a good time, to see if we can get a good comparative fixed rates in the market.
Do you think the RBI is gonna cut the rates? I think so.
Yeah, but I don't see that happening anytime soon. At least I believe, as the experts say, second quarter of next year.
Yeah.
Yeah, March.
A lot of
That's
a lot of experts are saying that look, they were saying that next end of this year. So we've
yeah,
got another RBI meeting in September, but I don't think it's gonna happen then. Maybe start of next year.
yeah. See, that's what it's like. We've been hearing it for a while now that the rates are going to come down. Rates are going to come down. There's going to be rate increase, right? August, everyone was expecting a rate increase, which didn't happen, right?
Look, I
So,
believe, look, it's just me, my experience, but I believe they do not have any other option than to cut the interest rates.
of course, right? They have to, right?
Yeah, they increase is
It's
not an
getting
option.
hot. Yeah, but definitely not. But see how the things go.
Look, on
Inflation is still on rise. Yeah.
New Zealand has cut their interest rates recently by 25 basis points. So, and look, before that, US has already done that. They have
US
cut
has
their
done it.
interest
Canada
rate.
has done it.
Canada
Starting
has
from next
done
year.
it. So I believe Australia is on the path, and they've got no other option. If they want to save the
Yeah.
economy, they've got no other option than to cut the interest rates.
I agree because they are having housing crisis right now, right?
And recession as
Uh,
well.
yeah, and the thing is, there's so many people that want to get into the houses, but then you can't because yes, you've got the grants and you've got the schemes happening, but still the affordability is getting an issue now, right?
It sure is.
Refinances are getting a bit better, right? If someone's looking into that, there are lenders who have reduced their assessment buffer for refinances,
Yes, I've heard
right?
that.
So they've brought down the assessment buffer to 1%, which is good, right? It just then means where we go, how much can be saved by doing a refinance, and what's the best strategy because it's all about your long-term strategy rather than a short-term strategy, right? We need to it's more about talking to your broker and seeing you know what's your plan. If your strategy is to leave a legacy for your family or for your kids,
Yep.
right? And that's a different strategy that we need to sit down and have a chat about, right? Your retirement strategy, right? How to pay off your mortgage as quickly as possible,
Yeah.
right? Yes, we are at times where interest rates are at the peak, right? But 2 years back when interest rates were lower, it was easier. People were having more surplus going back into their home loan,
Yeah. Yeah.
right?
Yeah.
So with surpluses going back into the home loan, you're basically reducing your home loan term,
Yeah, makes sense.
right?
No, 100%. 100%. And
So that's what we need to do, and that's what we need to understand is what that right strategy fits because everyone's got a different circumstances,
yeah,
right?
and different goals.
Uh, Good different goals, right? Different goals. Building your portfolio, either that could be by buying a negative gearing property, right?
Yeah.
Or or buying a positive getting property,
Yeah.
right?
Look,
Or just buy something.
yeah, yeah. Look, one thing that a lot of people know about me and my strategy and what I believe is in, and that is cash flow. A lot of
Yes.
people have a strategy not of making money, not of building that wealth, not of that capital growth, but it's a tax strategy.
Of course.
Look, I believe if
We
you're
need
making,
that cash flow, right?
like, but this,
If
cash flow is king. And look, you as
yes,
the finance guy, you would agree with me. I hope you do.
yeah,
But you would agree that the banks did see cash flow. They prioritize cash flow more than cash.
yeah, right. So let's say cash flow is important, right? Again, as you said, every client has got a different goal, right?
Yeah,
And that cash flow is in, especially in today's market, today's environment, right? Cash flow can help you pay off, reduce your home loan,
hmm.
right? And you can, by making an extra, say $500 for if you've got a loan of say 650 balance, right? And if you do a $500 extra by cash flow, you're reducing your loan term from 30 years to say, you're shaving it off by another 8 to 10 years, right? So cash flow properties are good, and that's what we need to do. That's what the strategy needs to happen. Is how is that cash flow helping you, right? Not only that, it's also about what tax benefits you're getting, what tax deductions you're getting,
Yep, yep,
right?
yep.
We need to look at that, right? Because if you are making more, if your combined household income is more than 180 or 200, you're on a high tax bracket,
Yeah, you are
right?
100%.
So again, if your goal is that, then we look at negative getting properties. If your goal is paying off your mortgage, then we look at positive getting properties, right? So it's different goals, different circumstances in that, right? And retirement, thinking about what you want to do in the next, by retirement, how do you walk away from that, right? Is by, you could also look at possibility of buying something in your SMSF,
I was
self-managed
coming to
account,
them. I was coming to that. When
right?
you said retirement, I was like, SMSF.
Right?
What do you think
And
about that,
SMSF
Shamim?
again, right? So SMSF again, like, as a mortgage broker, can't say much about it,
We,
but
we,
with the
we,
financial
we
planner,
really, really need to give that disclaimer first
yeah,
that we are not financial advisors and this is
and,
not a financial advice.
and you need to talk to your financial advisor to get that right advice, right?
100%.
But in a nutshell, it's if you've got a 200,000 of super balance right now, right, and say in 10 years, your super balance is not going to be 1.5 million,
No.
right? Again, talk to your financial planner about it. I might be wrong, but but buying a $550,000 property right now with today's capital growth of 7%, right? I'm being a bit more conservative. We're looking at a $1.5 million walk away with it,
Look,
right?
the super right now is around what? 11.5%.
Yes,
11.5%. So look, in 10 years, if you got a $200,000 super right now, in 10 years, you're touching what? 550
yeah,
in 10 years' time.
right. And if you buy a 550 property now, right, in 10 years, that could be over $1 million,
Exactly. You
right?
basically leverage the
So
money.
right, you
Leveraging the
leverage the
money.
money. The idea of super again, with super, keeping it within buying within your SMSF, there's no out of pocket, right? So you're
Yeah.
not dipping into your savings, you're not dipping into your, or your home loan or anything. It's all about your contribution, the employer contribution, plus your rent, right? These two covers your expenses, right? And it's just more income coming in, less expenses gives you a massive cash flow, right? So when you've got a cash flow of say $14,000 or $10,000 a year,
Yeah.
right? That cash flow goes back into your mortgage, when you SMSF mortgage, right? And you shave off from 30 years to 20 years or 18 years of 15 years, right? Again, that's a strategy that we can sit down, talk with the financial planner, with your mortgage broker. Is like if you're retiring in 10 years and you want to buy a property and you want to be mortgage free with the SMSF, then what's the right strategy? Do we do extra contributions,
Yeah.
right? Do we do voluntarily contributions to bump that surplus?
Or
You
you
already have
or you find the right asset.
find the right asset,
Right kind
right?
of right kind
Because
of real
yeah,
estate.
because ideally what you want to do is make sure your super loan is paid off by retirement,
Yeah.
right? That's why there are lenders out there in the market, they are brokers, they do offer interest only on your SMSF loan, right? Which, I advise not to do because the
Isn't that
idea is to
stupid?
pay off the mortgage,
Yeah, that's what I'm
right?
saying. Isn't that stupid?
Right. Well, it's again, it really depends on people's circumstances again,
Yeah,
right? But if you want to do a super, if you've got a good, healthy super balance, right? The idea is to keep it principal and interest and pay it off,
as soon as
right?
possible. Yeah.
As soon as possible, and that can be done with your contributions, rent, and that gives you the surplus,
Or even not
right?
even if as soon as possible. If you know when you're retiring, you know the timeline. Let's say you want
Yes,
to retire or you're retiring in 15 years,
yes,
for example. So we structure it in a way with extra
yes,
contributions or the right type of asset or the whole structure basically that we need to pay off the mortgage in 15 years.
yes,
So
right.
then when
And
we are retired, we've got no mortgage left. Instead of
yes,
going on
and
interest
I
only and
also
having the mortgage at the end of the day.
no. So you don't want that, right? That's something that I do not advise. Again, you need to talk to your financial planner, depending on your circumstances,
100%.
what they say, right? And also, when it comes to lending, right, SMSF lending is different to residential lending, right? It self-employed can do it, right?
Okay.
Self-employed can do so say purchase something in SMSF, right?
Because some employees are
Self-employed
doing
will
their
not.
own contributions, right?
Yes, they're doing on contribution, or because you can backdate your contribution,
Okay.
right? So you can backdate up to past 5 years and backdate your contributions, right? So if your contribution cap is 27,000, for example, right? You can backdate that by 5 years and put a lump sum money into it,
Yeah,
right?
okay.
So that's something, right? But again, if you're a young couple, you don't need to do
You
that,
don't want to do that, yeah.
right? Yeah, you don't want to do that, right? Because you've got other things to worry about,
Yeah.
right? Than your super, right? And with your super, the way I advise is to have the minimum loan, right, and put all your super money into it, right? Obviously, you need to keep some money in for the insurances and everything, but we want to make sure that you've got the minimum balance of loan when it comes out with super SMSF loan, right? There are lenders who would go up to 90% also in SMSF,
Okay.
right? Right. Yeah, so you can go up to 90%, right? But again,
So what's the drawback for that?
you've got a higher loan. That means you need more time to pay it off, right?
And you need to get that extra contribution as well. But you
Extra
can't
contribution.
because
Yeah,
there's a cap on
right.
that.
That means your surplus comes down again. That can work for some people, right? And for some people they can't, right? My the way I do structures loan is I always keep it. I want to keep as much lower the loan amount
Yeah, okay.
and put more money into your super, into the purchase, right? There are costs associated. You need to keep in mind there are loan costs, right? That will be, on a normal residential loan there won't be costs, but on the SMSF loan there are loan costs. There is the establishment fee, right? You know, for setting up that SMSF, right? For setting
Okay.
up the bay trust and everything. So that involves that there's a cost there, right? But again, all these costs do not come from your savings or pocket. They
They
all
go from all from
are from
super.
the super.
Yeah, and there is an annual cost as well for super for the audits and stuff and for
Of course,
legal
right?
costs.
So
So
I usually keep $3,000 for regulatory cost
yeah,
expense, right? And I keep $5,000 for general costs, right? So general costs will include your rates, notices, right? Your body corp and all those sort of stuff.
yeah, and it's amazing how a lot of people still don't know that they can invest from their super,
Yes.
and they can
Yeah,
basically leverage the money because the whole point of buying investments is that the money should work for you,
yes,
basically.
right. And there's a lot of misconceptions about super also, right? Yes, you've got 200,000. Do you want to go buy shares or you want to go buy property, right?
Yeah,
From your super, right? So if I ask you if you've got money, would you go buy shares or property?
me property 100% because we gotta look
Right.
at
So
we gotta do the risk analysis as well.
yeah, right. So those are those questions also to be asked, right? So there's a lot of misconception about super. A lot of people don't know that these things exist. A lot of people think it's very hard, right? It's
Yeah,
very It's impossible. You need to have a balance of 500,000, only then you can do it. And a good healthy balance of 200,000 can get you a good property,
A
a good
combined balance, family,
uh,
if your partners,
yeah,
couples.
combined, right? It can give you a good healthy property with high capital growth and a high rental yield.
Yeah, and up to 5 people can buy an SMSF together.
Well, yeah, yeah.
Yeah,
You
yeah,
can buy it as a trust. You can buy it as whatever you want to set it up.
that's correct. Look, I think we really don't want to go more in detail about SMSF because
Yes,
that'd be too much. And plus, we are
right.
not financial advisors.
Yes, of course we're not. Yes,
And look, everybody who's watching, either live or a replay, you've got the chance. You've got the finance guy in front of you. Comment your questions, or even if you're gonna watch it as a replay, just send a DM, and I'll make sure Shami comes back again.
yeah.
It's he's a
Yeah,
really
happy to help. Right.
he's a
You've
really
got a
hard guy
question.
guy to he's a really hard
You
guy to get on. But yeah,
you've got questions about your super. You've got questions about positive cash flow properties, negative cash flow properties. Right. Just get in touch. Right. Let's do a strategy. Let's do a session. Let's do a good 1.5 hour session and understand what your
goals are.
requirements are, what your needs are, right, and where do you need to be.
Yeah, and 100%. That's the most important thing. But yeah, look, everybody else who have questions, comment below or send me in the DM, and I'll tag Shamir as well. So if you want to talk
Yeah.
directly to the guy, I'm more than happy. No problem at all. And I think that's enough for today.
All right. Thank you, guys. Thank you. Bye bye.
If you have any questions, any finance questions, just shoot me a DM or type in the comments below, and I'll make sure Shamir answers all those questions. Till then, I'll see you next week. Have a great week, and ciao ciao.